Hello, and welcome. In the year 1637, in the height of the Dutch Golden Age, you could buy a grand house on the finest canal in Amsterdam for the price of a single flower bulb. Not a garden full of flowers. Not a lifelong supply. Just one single bulb. This is the story of Tulip Mania. Often cited as the first recorded speculative bubble in history. A moment when collective madness supposedly took over a nation, leading people to trade their land, their livestock, and their life savings for a plant that hadn't even bloomed yet. But was it really as crazy as the history books tell us? And more importantly, when we look at the volatile charts of Bitcoin, Ethereum, or the latest meme coins, are we looking at a modern version of the same human glitch? Today, we go back to the 17th century Netherlands to uncover the truth behind the petals and see what the tulip ghost can teach us about the digital gold of today. Part 1, the arrival of the broken tulip. The tulip wasn't native to Europe. It arrived in the Netherlands from the Ottoman Empire in the late 1500s. To the Dutch, these were unlike any flower they had ever seen. Their colors were intense, saturated, and, most importantly, unpredictable. Some tulips would break. A solid red petal would suddenly develop white or yellow streaks, looking like flames. Today, we know this was caused by a mosaic virus, but back then, it was seen as a divine miracle. These broken tulips, like the famous Semper Augustus, became the ultimate status symbol. The scarcity, tulips take years to grow from seeds. Even from a bulb, they only bloom for a few days. The status, owning a rare tulip told the world you were part of the elite. It was the NFT of the 1600s. It had no utility other than being rare and beautiful. Part 2, the birth of the wind trade. As demand exploded, the market changed. Initially, people traded actual bulbs. But you can only move bulbs in the summer when they are dormant. To keep the money flowing year-round, the Dutch invented futures contracts. They began trading pieces of paper that promised the delivery of a bulb at a future date. They called it wind handle, the wind trade. You weren't buying a flower, you were buying the idea of a flower. This is where the parallel to crypto becomes undeniable. 1. Leverage. People were buying contracts with money they didn't have, hoping to sell the contract to someone else at a higher price before the bulb was even pulled from the ground. 2. The echo chamber. The trade didn't happen on a formal stock exchange. It happened in taverns, over beer and pipes. Much like today's Discord servers or Twitter, X, threads, the hype was fed by a small, closed circle of people convincing each other that the price would never drop. Part 3, the crash and the great exaggeration. In February 1637, the music stopped. At an auction in Haarlem, a buyer failed to show up. Suddenly, the realization hit, the emperor had no clothes. Prices plummeted 90% in days. History tells us that the Dutch economy collapsed and thousands were ruined. But here is the twist: modern historians, like in Goldgar, suggest that mania was largely exaggerated by later writers to serve as a moral lesson against greed. The crash didn't actually destroy the Dutch economy. Most of the people trading were wealthy merchants who could afford the loss. The chaos was more of a legal headache over broken contracts than a national famine. Doesn't this sound familiar? Every time Bitcoin drops 30%, headlines scream, the end of crypto. Yet, the underlying technology and the market usually stabilize and move on to the next cycle. Part 4, Tulips versus Crypto, what's the difference? So, is crypto just a digital tulip? Let's look at the value test. Intrinsic value, a tulip eventually dies. It has no utility once it wilts. Blockchain technology, however, provides a decentralized ledger, smart contracts, and global 24/7 transfers. It has work it can do. Decentralization. Tulip Mania was local to the Netherlands. The crypto market is global. It never sleeps. It is fueled by millions of people across every continent. The greater fool theory, both markets rely on finding someone to buy the asset for more than you paid. When the supply of greater fools runs out, the bubble bursts. The real similarity isn't the asset, it's the human hardware. Our brains are still running the same FOMO, fear of missing out, software that the Dutch were running in 1637. Whether it's a virus-infected bulb or a dog-themed meme coin, we are wired to chase the green candle. Conclusion: the garden of the future. Tulip Mania teaches us that value is a story we tell each other. A diamond is just a stone until we decide it means forever. A piece of paper is just trash until a government says it's money. And a digital code is just a string of numbers until a community decides it's the future of finance. The Dutch didn't stop loving tulips after 1637. In fact, the Netherlands is still the tulip capital of the world. They just stopped treating them like get-rich-quick schemes and started treating them like flowers again. The bubble didn't kill the tulip, it just killed the illusion. Perhaps the same will be said of the current era of digital assets. Thank you for watching. If you found this comparison useful, don't forget to hit the like button and subscribe for more deep dives into the patterns of our history. Now, I want to hear from you. Do you think we are currently living in a Tulip Mania era, or are we building something that will last centuries? Let's discuss in the comments.